Shopify, and Amazon are benefiting as people are spending more money online. The good news for these two e-commerce stocks is that I expect, and most analysts expect, that a rising percentage of spending will move online. And the fundamental reasoning behind that is that it's just so much more convenient to shop online compared to shopping in person. Now, nobody thinks that 100% of shopping will move online, but certainly a larger percentage will continue moving online as the convenience advantage outweighs that of being able to go and pick up your products and be able to have your products immediately, especially as companies like Amazon are getting faster and faster at delivery. So investors are asking me, which one is the better stock to buy, Shopify or Amazon, to capitalize on this trend? I'll answer that question in this video by comparing these two companies on revenue growth, on operating profit margin, and on returns on invested capital. I'll also compare valuation by sharing with you my fair value calculations on Amazon and Shopify stock, and I'll let you know which one I think makes a better long-term investment at current market prices. Now, that's a lot to cover in a short video, so let's jump right into it after a short message from my sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So the first thing I wanted to compare these two across is revenue. Now, Amazon generated significantly more revenue than Shopify in the most recently completed period. And you see that with this chart, which so magnifies this difference. Amazon generated $670 billion in trailing 12-month revenue, while Shopify only generated $10 billion. That being said, Shopify's growth exceeded Amazon's growth in that period by more than twice as much. Shopify generated compounded annual growth rates of 46.5% in this period, which goes back to 2016, while Amazon, not to be minimized, generated an impressive 21% compounded annual growth rate in this time on a much larger base. So they both generated impressive revenue growth. Shopify generated better revenue growth. Amazon is operating on a much larger scale. The next metric I wanted to compare these two across is operating profitability and operating profit margin specifically. And Shopify actually beat Amazon in operating profit margin for the previous 24-month trailing period. Shopify's operating margin has expanded to 15.4%, up from negative 6.4%, and that increase is truly impressive. The number itself is solid at 15.4%, and the trend is also impressive. Amazon, also very impressive trend, increasing its operating margin from 1.1% to 11.4%, but the number is below that of Shopify. They've both done an impressive job. Shopify, notably, you see that big volatility in 2021. That's because Shopify spent billions of dollars experimenting. Well, at the time, it wasn't an experiment. At the time, the management team was really excited about going into fulfillment and logistics for its business partners. But that didn't work out so well, and the company quickly divested that investment. So they've now returned to their core asset-light strategy, which I prefer for Shopify. Amazon, meanwhile, has went deeper into fulfillment and logistics, bringing it more in-house, investing more capital, and this is good for investors because this is a core competency for Amazon, while for Shopify, it was a new category it was trying to go into, while Amazon had already been doing that for decades. So I like for Amazon to do that and for Shopify to stay asset light. The next metric I wanted to compare these two on is the return on invested capital. Amazon at 13.7% has improved from 9.5% in 2019. Shopify at 20.4% has improved from negative 28%. Again, impressive for each. Shopify with a better trend, Amazon at larger scale, and improving is impressive to be sure. So now that we looked at the critically important financial performance metrics, let's look at valuation. And what you're looking at here is my proprietary discounted cash flow model. For Amazon, I calculated a fair value for this stock at $285. The current market price at $232 suggests that Amazon stock is undervalued at its current market price. Now, when I calculated a similar discounted cash flow valuation for Shopify, I found its fair value to be $49 per share, and the current market price is $147 per share. Now, even after I account for a margin of safety, Shopify stock looks overvalued while Amazon stock looks undervalued. And the biggest reason for Shopify's overvaluation is because of the high risk of the business, the high risk of the stock as it relates to the S&P 500. The company boasts a beta of 2.7, and this measures the stock price movement against the movement of the S&P 500 index. And the 2.7 beta is really high. For comparison, Amazon's beta is less than half of that at 1.31. And given it's a smaller business, so it's riskier and it has more volatile revenue and operating income numbers, so that leads to volatility in the share price also. So overall, Shopify stock looks overvalued, Amazon stock looks undervalued. So if I had to pick between these two, this is one of the easier decisions when I make these comparisons, and Amazon would be the better stock to buy for me compared to Shopify. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.